Oh, we're live. So hi, everyone. Thank you all for joining us today. I'm Emily, the content manager here at Birdie, and I'm going to be the host for this session. Now, as you can see, I'm joined by not one, but two guests today. We're joined by James Eden, who's the Managing Director of Enthused Care, and David Budd, who's Head of Strategic Partnerships at Lifeline 24. Now, I'll let them introduce themselves properly in just a moment. But first of all, big hello to everyone who's already joined us. We'll kick off probably when, maybe in just a couple of minutes, just to make sure that everyone's had time to join. Now, just off, before we get started, you are all on mute, so I can't hear any of you if you're talking to me. But if you can hear me, could you just pop a yes into the chat box, which is just to the right of your screen? And James, could you just say a quick hello as well?
Hi, everyone.
And David too?
Hello.
Great. Now, if you can hear me, James, and David, just let me know in the chat box. And if you do have any sound issues, pop a note into that chat box as well. Some of the team at Birdie are going to be on the call, so they can help you out if you get stuck. But by the looks of it, yes, everyone is saying yes. That's great news. So hi, everyone. Cool. Awesome. So right, more from David and James in just a second. But what I'm going to do first is just set the scene for today, just while everyone's joining us. Now, at Birdie, we're working on a number of initiatives to help the care industry during COVID-19, and these webinars are just one of the things we're doing. Now, I won't go into all the details, and I'll share some of the other stuff that we're doing later on in a follow-up email to you. But most importantly, the reason we're doing these webinars is so that we have a collaborative network where we can all share our ideas, we can ask questions, and we can work together. Now, today's webinar is on your business finances, essentially. And we know that that's a big issue for many of the care agencies that we work with. So we've heard from guest speakers that the impact of COVID-19 has been a roller coaster. You know, you're up, then you're down, and things are constantly changing, which is why we've invited James and David to join us today. And hopefully they can answer some of your questions and help you navigate the landscape, you know, as it unfolds. Now, I'm not the expert in this. James and David are, so please do ask your questions as we go along. You can just use the chat box, just pop them straight in there, and we'll try and get to them as we progress through the questions that we have planned, or if not, we have a Q&A at the end of the session, so we'll be sure to get to those for you. So just, pop them in as you go, and I'll get to them when I can. Now, we're already a few minutes into the session. I think most people have probably joined us by now, so it's time to introduce you to our guest speakers. So first of all, I'm really excited to introduce you to both of them. And the first is James. So James, please can you introduce yourself and tell our listeners a little bit about you and what you do?
Hi. So it's James Eden. I run a company called Enthused Care. I've been running it for about 8 years now. I was new to the domiciliary care business at the beginning of when I first started the business. My career before that was I spent 12 years in banking doing investment banking for larger corporate companies. I found my time in working in care actually very interesting. It's been obviously a second career for me. I'm now sort of working from home, which I live over in the New Forest in Hampshire. So it's a bit more of a family life. Well, the expectation was for it to be a bit more of a family life orientated around running a care company. Little did I know how involving running a care company was, which, as I'm sure you will appreciate. So that's me already.
Thanks for that, James. Now, David, it's your turn now. Welcome to you. Thank you for joining us. Can you just do a really quick intro, let our listeners know what it is you do and a bit about your experience?
Absolutely. So yes, I having graduated in economics from university, I then went into banking and spent, I think, 13 years of my career working in the banking sector, starting really in the very much the S of the SME banking as a relationship manager, and then gradually moving up into the world of corporate banking. And kind of the final bit of my career in banking was actually working in the corporate healthcare team at Barclays. I then, having got a little bit disillusioned, moved into the world of fintech, joining Funding Circle, which at the time was a rapidly growing loan provider for the SME sector. I led a team there, and then very recently I've made the jump into the healthcare sector, working for Lifeline 24. We're a provider of technology-enabled care, so sort of primarily the pendant alarms that a lot of elderly people have in their homes. I'm running the partnerships team, and I'm going to talk a little bit more about that at the end of the talk.
Perfect, thanks for that. So what we'll do now is we will just jump straight into our Q&A. And like I said, any questions you have, put them into the chat box as you go along. And I'm very sorry I had to just run off and stop the doorbell going off, which was great timing. I hope that wasn't too distracting. But anyway, we will get going. So thank you very much for introducing yourself, guys. Again, questions, direct them either to James or to David, or just to all of us as a whole. Pop them straight into that chat box. So first of all, we'll get started. And I'm going to ask you, James, what are the biggest financial challenges facing home care in agencies right now?
I think that the whole COVID situation right now has led to the care business being even more unpredictable than it normally is. We usually have to sort of roll with the punches and understand sort of seasonality of care, which can be quite extreme at times. We always seem to have either not enough staff and too many clients, or vice versa. And I think the COVID situation has just accelerated that process over the last couple of months. So from us here, we went from a situation where we had, just to explain, actually, we're a bulk provider of care. So I tend to work predominantly with local authorities. So my private client business only represents maybe 10 or 15% of my overall turnover. The rest of it's local authorities. I like that because the client's then a tap you can turn on and off quite quickly. So I'm very focused on recruitment, and we found that we had a situation where local authorities were desperate for additional hours and for emergency retainer packages, such as us putting in place maybe 500 or 600 hours worth of ability to provide care before the clients were actually known or in place. And we were trying to staff for that. So the financial situation we had with that was I went from having to invest a lot in recruitment, both my recruitment team as individuals, the advertising, and then the taking on of clients, taking on of staff, and then trying to work out how to keep the staff engaged and with us until it came to the stage that we could actually have the clients to put in front of them to generate some cash. So for me, the biggest problem was we went to this feast or famine situation. So there's a huge amount of unpredictability, feast and famine, and I was sat worrying about the cash flow and would my clients come in time and me be able to bill the local authority in time to be able to pay the staff. So
yeah, that's kind of something we're hearing a lot. Sorry to interrupt you there. Yeah. But in terms of kind of overcoming that, so, you had this shift and you were, recruiting and then making sure, what did you do to overcome that problem?
We had I always have very good dialogue with my local authorities. So I was telling them all the way through the process what my concerns were, what my sensitivities were, how we expected things to happen. And with that, it then allowed us to, for the local authority we were very prompt in paying us, which was good. I think sometimes people are a bit worried about pressing the relationship button with their local authority, but I do it quite frequently. I make sure it's a two-way street. So, I'd say to them, I need to invoice you quite quickly. So I've got somebody saying they can't hear. But can you hear me out of interest, Karen? I can continue on anyway.
I'll try and sort that.
And great. So they were quite prompt on paying. I think one of the things I didn't mention was from the additional cost perspective, many of the local authorities were there and saying, if you have costs which are very related to COVID and not to your normal business, then tell us about them and they'll look to try and help pay some of those, which was very good of them. Plus the general banking opportunities, where they were looking to provide loans very quickly. And I've always been, every time I open up a new office, I always make sure a new office is opened under its own company name. So I have lots of infused care partners, Southampton, Bournemouth, et cetera, So I was lucky enough to have a number of different rates grants that came through to me, which was, and they paid those very promptly. So for each office, I was able to get 10 grand, which was good to help cover, the fact that I was paying out another couple of grand per office for an additional recruitment person and also for additional admin.
It makes a lot of sense, and thank you for sharing those with us, James. Now, David, do you kind of agree with what James was suggesting there, or have you got any other techniques for managing the financial challenges at the moment?
So I'm certainly not going to disagree with anything James said. I think and I'm always going to come at it from some sort of managing the cash flow challenges that come up from the different challenges that each person will be having. I'm very aware that whether you're private client focused or local authority focused, those challenges are going to be very, very different. The first thing I'd say, and people might feel it's already too late for this, but really using the furlough scheme for what it's there for is really important. I've talked to companies who delayed putting people on furlough, even though they suddenly found that there were a lot of people not doing what they were usually doing in the day. The work had dried up in certain areas of the company. So really do look at the furlough scheme, use it where appropriate. And one thing that's really key, while the current rules of the furlough scheme say you cannot have people doing any work for the company, what the government have said in their latest guidance is, and that as they try and wind it down, they will allow people to start doing part-time work, but you will only pay part of the cost of that. So it's a really good way to manage your current outgoings, really. I think something that people should look at if they've got a real crunch at the moment in terms of cash flow. It's something I don't usually recommend as someone who's worked in finance a long time, to actually short-term invoice discounting can be a really good way to access money. James is laughing because he originally said he would absolutely tell people not to do this. But in situations where you're owed money, whether it be from a local authority that's just not being as quick as usual or not being as quick as you'd like, or even private clients, there are companies like Market Finance, who used to be a competitor of mine, but they are really good at allowing you to almost sort of within 24 hours selectively sell your invoices to them and get access to money quickly. So if you're finding yourself in a real crunch point where you've just not got access to the cash that you need for whatever reason, that's quite a good route to go down. And there are a number of fintechs who do similar things that can allow you to get money quickly if the banks aren't giving you access to it. I will talk a bit later about the different loan schemes that are available at the moment, but that's a really key one for kind of those crunch moments. They also, I realised when I was researching it earlier, they do allow you to actually get access to money you're owed for furlough, because there is a couple of weeks delay when you furlough workers to when you can actually get that money paid by the government. So there are things there for the short-term issues that we're kind of all dealing with at the moment. James mentioned the 10K grants. If you're eligible for them, it's purely free money and you absolutely should go and get them. There's a lot of guidance on the government website, but also on things like the CBI websites. They're really good at telling you all the things that you might be eligible for. So check them out.
That's great. Thank you for that, David. And I'll send the links to those websites in the follow-up email as well, so you've got those. Great. Cool. So now we're kind of going to talk about the factors that have been contributing to a cash flow imbalance. And there's quite a few, and there's a lot of different things that have been happening, of course. But my first question is to James. Have you lost any revenue from private clients cancelling visits, or have you had to change your visit packages due to COVID-19? And really, what's been the impact of that for you?
Yeah, from a private client perspective, we have had some cancel, and some, private clients have gone to spend time with their family, etc., etc. I suppose that's where I've been lucky enough to have more local authority clients, which has been quite an advantage. Thanks. And the local authorities have certainly turned around and said that they will pay the full amount for the calls, even if the family or the service user cancels a particular set of calls. And sometimes that's not necessarily been a bad thing as well, to have a slightly reduced volume in terms of number of calls, because certainly at the beginning we were seeing we were having more staff shortages as they were going off You know, I think probably everyone's been in the same boat with the fact that there was a number of staff who went off at the beginning straight away with having to either shield themselves or shield a member of their family. We actually found the two things balance up quite well. So yeah, so the private clients, there was some reduction. Yeah.
And the next question here is, how has the cost of PPE impacted your business? Because we've been hearing from a lot of different home care agencies that, you know, the cost of PPE are just rising and they can't keep up with that. So have you found that as well?
Yes, and like everything, I've been shopping around quite heavily. I've just actually had 16,000 masks arrive today for me, which is an order I put in about 2 weeks ago from China via Alibaba. I was very, very worried about it. You know, it was a large enough amount of cash that I would miss it if it didn't come through. I did all the things like I'd not used Alibaba before, and I've seen they have like a trade assured scheme, a bit like they have with eBay, etc. And I made sure I paid for it on a credit card rather than paying it for anything else. And so I could, if something went wrong, there's all different mechanisms I could use to try and claim the cash back. But yeah, lo and behold, they've arrived today. So
that's amazing.
Yeah.
I think that's a good tip that you just said as well about paying on credit cards and making sure you're looking at ways that if it wasn't to come through or if it wasn't, you know, you didn't get it on time or whatever, then you're covered. And that's definitely important, especially now that our care providers are reaching out to cases that they may not have been getting their PPE from before.
Yeah. Local authorities as well have been very good in allowing us to charge back to them additional costs because they realise, you know, we have the joy of working with Portsmouth City Council, great group of people, terrible payers. You know, their rate is something like £17.40 per hour, which I'm sure many people working with private clients are more used to paying or being paid £24, £25 an hour. So they realise that they, you know, if they wanted to do a 15-minute call, and which is going to be roughly about £4.50 for the call. If we're having to pay out £2 on PPE and plus staffing costs, we're losing money doing the call. So they've realised that they have to pay additional amounts of cash, and they're happy to do that. Some local authorities and the NHS CCGs have been paying a straight 10% uplift, which kind of more or less works. You know, if you've not been offered these things by local authorities and the NHS, have a quick look or speak to your relationship managers, etc., and find out what's the scoop there.
Definitely, that's a really good tip, and I think we're hearing from quite a lot of people that, you know, they've suddenly had to pay out for masses of PPE or things have changed and they've had to kind of pay out more money and they're not quite sure what to do about that. So my next question is to David. There are a lot of factors that could affect your cash flow at the moment, and I mean in general anyway, but especially at the moment. So what's your advice on sort of managing these costs as they come in?
So really for me, and the advice I give to any business, including the one I currently work for, understanding to a really detailed level what impacts your cash flow is the key to getting this right and to not being kind of caught short. You know, the standard thing that everyone says is cash is king, which is absolutely true. The difference, I've had to sit with business people before and explain the difference between profit and cash flow. And if you're not understanding at this point in time what a week's delay in making a payment to a supplier might be, or someone not paying you when they're supposed to, and what that will then do to your cash balance and ability to make your other payments or your, you know, your wages costs, that's going to be a real issue. And you need to get underneath that, because then you need to identify actually what your big risks are and what you need to do to mitigate those. That will then also be really key for you as you start to move through this and start to hopefully look for opportunities that come for it. Right now, if I was looking at any kind of cash flow issues, I'd be first of all saying, right, who do I owe the money to? What's my relationship with them? James talked about this before. Have really open conversations about whether they'd be okay with you delaying it. Or if you're in a situation where local authorities are paying quicker than usual, or you're getting that money in quicker, can you then actually pay your bills quicker to get a discount and therefore give you more, frankly, margin, which is also quite key. Yeah, look and see where you can essentially extend your working capital cycle. And also, you know, look at what's going on in your business and where you can cut costs because of what's going on. A lot of businesses have just decided to completely cut off marketing spend because they don't think it's the right time to be trying to build new business because a lot of the businesses they wanted are shut down or having issues. Also, there's the cost of doing new business and actually, do you really want to pay money to go and get new business when you have to turn it down? So I think that's really key. I think there's actually, because there's such a huge opportunity for the sector at the moment, and I think with care homes being hit incredibly hard from this, and ultimately, you know, I've been reading things for 2 years about the crisis in the care home sector. It will only be made worse from what's going on now, and I genuinely think the domiciliary care sector is going to be the big beneficiary of that. So you may have opportunities to actually grow quite quickly, but again, knowing what that will do to your cash flow is absolutely key. I was going to say it earlier, but one of the key things that you learn when you look in economics and banking is the majority of insolvencies don't come during the peak of a recession. They happen as the economy comes out of the recession, because that's when companies are growing and that's what costs money and creates shortages in cash flow. If you are aware of your ability to meet the demands of new business, then you will plan for it and you will be able to pick up things when other people may have to turn it away.
That's some really, really good advice there. And I think, you know, a holistic overview of everything that, you know, you're doing and just knowing where the cash is going out and where it's coming in and really seeing that and breaking that down is super important, especially during these kinds of times. And we will touch a little bit more in a moment on business contingency planning and sort of how we do that. But my next question, and sorry, thank you, David, for that. I think that was really, really useful. So thank you for sharing those. My next question is to James, and it's one we've been hearing a lot. And I think things are slowly getting better in this area, but there has been an increase in self-isolation and sickness and people taking time off, which you briefly mentioned earlier. Now, how has that affected your business today?
I suppose there's two different elements to it. There is the usual people who have been off, who go off sick as soon as there's any opportunity to do that. I'm sure we've all got them in our workforces. And I was very happy to be able to use the government SSP or furlough scheme to help cover those costs. So, you know, that was really quite useful. We've had a number of people who seem to have repeating sick notes that have come back, and I believe the government scheme is on the SSP has been that they you can only claim back the first 2 weeks. So what we've then been looking to do is actually to furlough them if it looks like they're going to be continuing on. And I suppose it's a case of having to know your staff and predict what different people are going to do. I think probably like most agencies, we sadly have to run a 0 hours contract. We don't get paid if we're not looking after somebody. If people are just refusing to come to work, saying that they don't want to work in this environment, at the end of the day, if it's their choice, then that's what they do. They have to do that. You know, they do that off their own bat. And I suppose the last point I was kind of thinking about on this is, we've had to be tough with people at a time when you really want to be nice to people. I don't think anyone gets into care who is a complete, hard-nosed whatever. Everyone has a caring element to them. That's why we end up doing this business. So we hate it when we have to have difficult conversations with our staff. But sadly, even at this time, we still have to. And that's not been pleasant. But yeah, if somebody just doesn't want to work because they don't like it, or they're seeing all their friends not working, and they want to spend the day doing TikToks, dances, whatever they choose to do at home, then that's their choice. But I'm happy to say that the majority of our staff have been out there and doing the right thing for the right reason, which has been really good. And where we've had to, we've used the furlough scheme.
That's really good. I'm glad that most of your staff are still working and still willing to work, because we've been hearing lots of different stories from lots of different partners that we work with. Some have ended up with hardly any staff. Some have had, 20% off. But no, that's really good to hear that most of them are still out there doing it. But David, what is your financial advice for the people that might be struggling with a lot of staff who are off sick, or they're not sure whether to furlough, or should they furlough? Should they be on sick pay? What's the impact here, and how can we kind of manage that? I suppose mitigate that as well.
So James said a lot of very sensible things around furloughing there. I hadn't actually heard what he was going to say on that. So I may do a little bit of repetition. I think with our company, we've been very, very clear that as soon as we hear people saying that they're not willing to work, it is a furlough situation. But it's also one you can end furlough quite quickly, as far as I know. And we are now in a situation where every week we're reviewing who we furloughed. We are bringing some people back, but others are now going on furlough. So it is something you can keep on reviewing and looking where the needs of the company are. Sorry, I'm getting distracted by the nice comments that are coming in as well. One thing that we've done as a sector, where people are having trouble with staff in call centres, which is one of the key things that we need to provide, suddenly competitors are talking to each other and working with each other to fill that gap. And that's one of the amazing things about here. We've got situations where Tesco's and Sainsbury's are coordinating on supply of food, which would never have happened. You will have people, other companies in the area who may have staff who are able to work, who they don't have the customers who need them at this point in time. It's worth reaching out to them. It may only be a temporary kind of drop of the competition between you, but ultimately it is the care sector. We are here to make sure we look after the people who are vulnerable and are more vulnerable than ever. So that might be one way to fill those kind of staffing gaps. When I was thinking about this, ultimately, if you're not able to get people to send out, and that is causing those cash flow issues, what I would say is a lot of people will have facilities with banks, and you may be in a situation where you're struggling to meet your repayments on that and things like that. The banks should be falling over themselves right now to grant repayment holidays or renegotiate loans or to refinance them onto the COVID loan schemes, which I'll talk about in a bit. Have those conversations, because it's really bad for the banks if your debt goes questionable and bad, and they should do everything they can to stop it. Your bigger challenge might be getting hold of the banks right now, because every bank manager I used to work with is having a very, very intense time and working very, very hard to try and do what the government's asking them to do. One thing I'd say, and this is really around, what you can do with your team that are on furlough, get them doing training, work out what skills gaps people have. You can get them doing training as part of their furlough. And it's a really good opportunity to actually look at your teams and say, right, you're at home, you're doing nothing, you are still getting paid, you should be doing training, and you should come back to us a more capable staff and able to add more value to the company. So push them on that. And something I've used personally, where we've not had too many staff shortages, we've been very lucky. But where I've had things that I need to get done and done fairly quickly, I've actually used Airtasker recently, where you don't just get people who want to clean your car and put up shelves. There are accountants on there who will, look at your payroll. They will look at the costs in your business if you want, and look at your cash flow. You can get some highly skilled people who are all sitting at home wanting to earn money, and it's quite a good way to increase your capabilities in a shortened staff environment.
That's some really good tips there. Thank you, David. And definitely, look at people who can help you. And I think this idea of also sharing staff is a great one, especially now. We're in a prime time that we can do that. So for sure, definitely. I think
just quickly to add something to that, actually, if you are going to call your bank manager, you know what they're going to ask for as soon as you call them up. So don't phone them up without having your cash flow forecast for the year and last year's accounts to hand. Because then when you have the conversation with them, you look far more organised and far more, like you know what you're doing, basically.
That's really good points, James.
I think, again, that comes back to what we were saying before, getting yourself in order as well. If these bank managers don't have time, the best way you're going to get help is by making sure that you have everything together. So a really, really, really good tip there for sure. Now, I'm just going to move the slide over. Now, the next thing I wanted to talk about, which I think, again, relates to what we've been chatting about previously, is about business contingency. Now, I think most businesses have some kind of a contingency plan in place, but perhaps it's not geared towards, a global pandemic. This is probably the first time we've experienced this in our generation. But James, do you have a business contingency plan at Enthuse Care that helps you to manage your finances? And can you kind of explain just a little bit about what that contingency plan entails?
Well, this is a really tricky question for me, actually, because the only answer I can give is that, I have reserves, and this is my reserves are to cover it, because the contingency plans I typically have are to deal with different situations, bad weather, infections, loss of staff, those kind of things. The impact is usually, the impact on me financially is always going to be pretty similar. I assume that I'll be short of cash, and the only way I can deal with that is either having my own cash reserves, which, being the business owner, would either be money that's sat in the company, or private funds that I can pour in from a director's loan, etc. In terms of cash. And then the other elements are, of course, the access to banks and facilities with them. And I don't really want to go too much into that, because I'm guessing that how to cover those is going to be something that David's going to want to talk about. So I don't want to take too much away from that. But the key thing for me is I've always, maybe because I'm an ex-banker, I've always understood that relationships are really important, and I can't highlight that enough. People seem to get angry with their banks for no reason. At the end of the day, they're human beings trying to do a similar kind of job to what we're doing. It's just that they deal with money and we deal in care. I used to deal in money. I've just changed the commodity that I'm dealing with.
Some really good points, and I can see David nodding along enthusiastically to be nice to your bank managers.
Bank managers have feelings too. No, I mean, I would honestly say, banking has a bad reputation in many ways for good reasons. I have worked with hundreds of relationship managers over the years, and very, very few of them ever had anything but their customers' best intentions at heart. Talking to some of my friends who are there at the moment, they are working all weekend, every weekend, in their evenings to try and get the funding that people want. They are genuinely working hard for their customers. So yeah, be nice to them. They'll often ask questions and you don't understand why, and it's really frustrating, but usually it's to do with the regulations they're under. So yeah, grin and bear it if you can, but certainly try and be proactive with having the information they might want in advance, because it will speed up the process for them.
For sure. Now, David, as well, just one more for you here is, if a business doesn't have a contingency plan in place yet, or they haven't really built that one out, where would you suggest that they start? So if I go off on a tangent, apologies. I subscribe to something called the Deloitte Weekly Update, and Deloitte have a brilliant team of economists, and they do a CFO survey on a quarterly basis. And this thing often makes headlines because most of the big CFO companies, or big companies in the FTSE 100, they actually respond to it because this gets read. When it comes to times of crisis like this, they always go to the same priorities, which is essentially shoring up their balance sheet, securing access to cash, and cutting costs aggressively. And that is the contingency plan everyone should have right now. It is so important at these times to work out where there is the opportunity to trim the fat, whatever it might be, put projects that aren't urgent on hold, redeploy your staff to areas where they can be of use now if they're really not adding enough value in what they're doing. And we have done that on a large scale in our company to make sure that we can continue doing what we're meant to do, which is look after our customers. In terms of access to cash, I'm going to talk a bit about that in a minute. During the last financial crisis, the number of companies that put in place overdrafts or long-term financing facilities with absolutely no need for it was huge, and they've kept them in place year after year as an insurance policy for a just-in-case situation. And there is a cost to doing that, but ultimately, does the cost of putting it in place outweigh the cost of being caught without access to the cash you need?
to deal with any surprises that might come up. And there may be more surprises to come from this. We don't know if we're going to get, we don't know how long it's going to be. There are so many known unknowns in this crisis, and the recession that's going to, which has started and that is going to follow it. We don't know what the response to it once we've passed the initial outbreak will be, how the government is going to look to actually start to pay off the debt that it's taking out in its hundreds of billions at the moment. So you need to be prepared for all those by making sure the company is in as good a health as it can be as we come out of this. I say all this, and I also am aware that with demand being where it's likely to be, there are going to be huge opportunities for care companies. And something that we're doing at the moment is actually making sure that we're just in a far better position than our competitors. Because even if times are hard for you, if you know you're better than the next 5 competitors out there, they're more likely to get into more dire straits. You potentially could be going out and buying your competitors at the end of this if you've got the cash available to do it. You will certainly be in a situation, if you're in a good standing, to pick up more business. So it's looking at where the opportunities come. And in the darkest days of the financial crisis, there were people who were becoming millionaires by doing the right thing with their businesses. I saw businesses in the hospitality and leisure sector when everyone was saying all the pubs were going out of business, and they were printing money because they had great management, great product, and a good offering and customer and loyal customer base. And every business can turn this into an opportunity if they plan ahead.
And that's actually a really nice positive message there. When we talk about financial planning and contingency planning, it's normally a bit sort of like, oh, what do we do if it all goes wrong? But actually, there is a huge opportunity here. And by making sure that care agencies have their finances in order, they know what's coming, and they're planning for these changes, I think there is definitely a huge opportunity. So that's actually really nice to hear you say that as well from a bank manager. Really nice there. Cool. So there is a few questions that have just come in, and I will get to those probably at the end. So do please keep on sending those through, and we'll get to those in the Q&A. But the next thing I wanted to talk about, as I think it follows on quite nicely, is the government help and the way that we can utilize that. But before we kind of jump into that with David, James, I'd just like to kind of ask you, what changes do you foresee in the way that you run your business now due to COVID-19? How does the future look for you guys at Enthuse Care?
I suppose there's some physical changes we've made around the office, which is all kind of rather predictable and self-explanatory. There's, lots of people are doing similar things. I think we've focused a lot more on the health profile of our staff. So, where in the past we might have been matching staff up with service users based on how we think they're going to get on, we're doing analysis on, do we have staff who might have a high chance of catching COVID because of what they do at home, or they're like younger and you possibly know they might be going out and not isolating as much as the other people when they're at home, therefore should really be using them for service users who might have non-health related requirements. And I suppose keeping an eye on PPE and just being kind of quite honest with yourself about when you need to actually spend that cash and making sure you're not panicking. I think we're doing a lot of that sort of going forwards as well. So, at the beginning of the crisis, yes, like everyone else, I sat there, my head was on fire trying to work out where I'm going to get aprons and stuff from. And then when you sort of settle down and go, okay, well, who makes things like aprons? They're plastic bag manufacturers. Right, okay, then let me start phoning up some of the plastic bag manufacturers who are in my local area, and I did, and lo and behold, I found a few who've now switched to producing aprons, and it's like, oh, yeah, great, I can get them. It's quite easy. So yeah, it's kind of, I suppose, keeping calm.
No, for sure. And when it comes to support and advice from the government, have you had any kind of, what can you share any that you've had, or have you had to rely on any government loans? Do you know where people should go to get that information?
I must say, I don't know. I've had so many emails about people wanting to give me advice. I could spend every single day on a conference call hearing probably the same piece of information from a different body. So if you're struggling to try and find advice, then then yeah, you should not have a problem finding advice. Yeah, local authorities, the CQC are sending out regular emails. The CCGs are sending out emails. If you're not a member of a kind of a domiciliary care association, which, to tell you the truth, I'm not a huge fan of. They don't normally do much for you, but actually paying a couple of months membership at the moment might be a good thing, because they're distributing information. Skills for Care are distributing information. HMRC, you know, you name it, it's coming from everywhere.
I think that's some really good places to go there if people don't know where to find that advice, but there is a lot out there at the moment, so definitely go and search for that. I will include a few in the follow-up email as well, to make sure you've got those. And now, David, we're talking about kind of, you know, government help here, and we've mentioned it a few times, but when it comes to the government loans that are available, can you maybe just explain the two that are available and the differences between them, and maybe how people can use those?
Absolutely. I will say there is a very good website from the British Business Bank that gives comparisons either side, so I'll share the link at the end. But I will start off by saying the loans that are currently available, where the government has completely disrupted the kind of the lending industry in the UK by putting these in place, they are genuinely very good opportunities in terms of taking out debt. Even if your cash flow is really healthy right now, and going back to the what do you do in a crisis, you make sure you have access to cash. I would be considering one of these loans as something that gives you a lot of security and will give you access to cash, probably on a cheaper basis, or at least a better kind of termed basis than you would ever usually be able to get in normal times. Obviously, everyone needs to take their time on looking at these and make sure it's the right thing for you. But I really would be looking at it if you've not already. The first one that was announced was the Corona Business Interruption Loan Scheme, or CBILS as it's been known. This is available now from £50,000 up to, I think, 4 million is the most you can get from it. So it's available to a wide range of businesses, both small and fairly large. This is a bit more like a traditional lending facility. The banks have flexibility to structure it however they want, so it doesn't have to be a term loan. It can also be an overdraft, can be invoice financing. So there's a bit more flexibility, but it will be done a bit more like a traditional loan. So you will probably still have to give them all of the kind of information you might have had previously, and you need to have a valid reason for needing it, and you would have needed to have been viable before this crisis happened. So there'll be a bit more of a business assessment. They will not take any personal guarantees for this loan. Neither will either of the loans, and that is really great because most loans these days come with a PG. But if your business has assets, they may take security over those. I imagine that will often be a debenture, but each institution will approach it differently. The other one is the business bounce back loan, which has been designed really for smaller businesses. You can only borrow up to £50,000, but there appears to be almost no assessment criteria except for the fact that you needed to have been an operating business before this started. The government has completely guaranteed these loans, so no banks are worried about losing money on it, no fintechs are worried about losing money on it, and it's got a guaranteed rate of 2.5% with no interest rates for the first year, no capital to be repaid for the first year. I've never seen anything like it. And so if you don't need more than that, I would highly recommend you look at that loan scheme because it's very, very good. If you do want more, the CBIL scheme, you know, it's still very good, but you're not guaranteed to get a capital repayment holiday in the first year. On the BBL scheme, what I would say, if you've got debt on credit cards as a business, on asset finance, anywhere else, I would refinance that debt onto the BBL scheme because you've then got your security you've got in place for that will disappear. The cost will almost certainly be lower, and you won't be paying that debt for a year if you don't want to. And if you want to pay the whole thing back at the end of the 1 year period, you can. I think that was everything I needed to say. Yeah, if you've got questions about it, I will be happy to answer them and go into a lot more depth around these things. The one thing I will say, even though you may not be putting any security towards these loans, be very clear, you will be required to repay them. And while they won't be able to go after your personal assets, they can wind up your business if you can't pay. So there are consequences to not paying these loans back, and just be aware of that when you're going into any loan scenario. Talk to your accountant, talk to your lawyer if you have anything you don't understand about the terms of these loans.
Some really, really good advice there. And Nicola just said as well, we took out a bounce back loan, even though they have enough cash in the bank because it's too good to turn down. And I think, yeah, that is the advice here, is, you know, definitely make use of everything the government is offering right now. There is so much you can get hold of, and it would definitely help with security. So again, as David said, if you have any more questions on those, do pop them into the chat box and we'll get to those at the end. Now, I think we've kind of gone through most of the questions that I had here, so we will come to the ones you've asked in the chat box just towards the end. But the last thing is for both David and for James here. Do you have any tips for areas where money can be saved? We mentioned this very briefly earlier about, you know, trimming the fat and those kind of things, but any specific advice that you guys have got would be great. David, maybe you could go first.
So I was thinking about this. I would always take the opportunity to look at the professional services you're employing. You know, accountancy is an incredibly competitive business, and a lot of it's being automated. If you're paying a lot for your accountant, look at your options. I would usually say do a banking tender if you're paying a lot for banking, but they may find it hard to respond or do anything for you at the moment. Look at what things you can outsource. If you're short of staff, you know, a lot of services like payroll can all be outsourced fairly cost effectively if you look into it. And then another thing, and this is, we've always had a policy at Lifeline 24, we hire loads of interns. They're really cheap to do, they're really keen. You do get a mixed bag, but the ones that want to work hard, they are phenomenal and will just suck up opportunity to add value to the company. So do it, just a way of keeping your staff costs down.
Cool. Good advice there. Sorry, James, and your tips on saving money as well would be great.
I suppose I re-examine everything that I do reasonably regularly. I also don't. Oh, my wife's trying to call me. There we go. I'm in trouble for that. I also try and explain to staff what they're doing and why they're doing it, because sometimes, you know, if people get a bit job about what they're doing, then all of a sudden they're grabbing lots of PPE or they're grabbing lots of forms or this or that, and you sit there as the company owner and you sit there and go, I'm paying for that. It might not be much, but I'm paying every time they do that. It's costing me 50p, and I've got 350 staff, and I've got, you know, that mounts up quite quickly, and then you suddenly realize that you could be saving 200 or 300 quid a week just by having spent some time explaining things to either your supervisors or your care managers or your care coordinators. Yeah, and care coordinators can be something as well. Sometimes they get very focused on piecing together a round which is efficient for a reason that's not a financial reason, and you just have to say to them, we can't afford to do business in this way. But again, I'm a volume provider, so I look at everything down to the last penny. It makes such a difference for me. So if you're lucky enough to be a private client as your core business and have a higher margin, then your thoughts might be slightly different, and you might be wallet sizing your clients and seeing where you might be able to get a bit more cash out of the service you deliver by offering other services, you know, whatever that might be, cross-selling somebody else's products, etc. Who knows?
No, really, really interesting. Thank you for sharing those tips with us. Now, just going to head on over to our Q&A. There's been a few questions that have come in. Now, one from Nicola here says, how has it affected your staff morale by furloughing some of your staff? I think our staff would be really annoyed that they're out working full time when some of their colleagues are sat at home still earning 80% for doing nothing.
I'm happy to. So one thing we did, we asked people first of all if they wanted to be furloughed. We didn't say we were definitely going to furlough anyone who said yes, but we gave people the chance to kind of put their hand up, and that helped us in making sure we knew who wanted to do it, who didn't. I think people just taking the attitude that, oh, it's a break from work, I can live off 80% when I'm not going out, is really naive. because a lot of people are going to find that they come back from furlough and end up being made redundant. Even if it's not now, it's slightly further down the line, because the companies they work for are seeing that they don't need them. So it might be worth getting people just to think about the wider kind of implications. The fact that they are essentially taking time off work, it is an interruption to their career development. They're not contributing to the company. You obviously can't kind of make veiled threats, but you might want to just encourage them to read around and think about what it means.
Yeah, absolutely. Knowing your staff, that's been key for us. Some staff who you might know, their slightly extended family might have some health issues, and you can have a conversation with them about, saying, look, we want to furlough you not because you're doing a bad job or because of this or because of that, but we know that X, Y, Z might happen. So that's on one side of it. I think everyone knows, who the staff they have who would probably quite like to sit at home on 80% pay for a while are. And then we've been quite tough. There's been a couple of guys who have tried to get themselves furloughed and lied about their situation, claimed they're living with people they're not living with, and we know they're hanging around and going off and doing certain things. I suppose everybody has Facebook, and it's always surprising how much information you can get off that about what your staff are really doing, and then just pulling them in and having a chat with them, going, look, you're taking the piss. What do you expect me to do apart from deal with the situation? Make your mind up what you want to do. So we've always, like I mentioned before, we've always been very sort of straightforward, honest, and open with our staff.
A really, really key thing, especially while people are all off, and I think maintaining those channels of communication is really, really important. Now we have another question here that says, the minimum wage has gone up and we are not on a council framework. Our service users are on direct payments, and it seems the council are not reflecting this increase. How is this best to be managed, because the service user cannot afford the increase?
That's the case of, you have to decide whether or not you and your family as the business owner are a charity, and if you're not, you have to pass it on, because I'm very sad that the local authorities at this stage don't believe they have enough money to do it, but I can't afford to run at a loss. Therefore, it's a hateful thing to have to do, but you just have to put your prices up, and you will find that people will find the money from somewhere.
There was another comment that came in that said, they've had to put their prices up because of that. And there's one question as well from Bianca that says, do you know what the benchmark for healthcare industry and or domiciliary care is? And I think that kind of comes into what we were just saying, whereas, the benchmark is, I suppose, you need to work out what your costs are and the prices need to align with that. And is that something you would agree with, James?
Yeah, absolutely. You have to be all over your pricing, and you have to make sure that you've got spare capacity in there. And actually, for private clients, I know that everyone tends to charge a little bit more. For local authorities, if you push back to them and are just open and honest about whether or not you can afford to do business at that level, they will come around. They have their own rules and regulations behind that as well.
Really good. David, do you have anything you wanted to add to that?
It's very care domiciliary specific. I mean, the one thing I've kind of talked at the top around the importance of understanding your cash flow. Part of that is just understanding the genuine cost of delivering the service that you do, not just the kind of the wage cost of the staff member, but actually everything in the background. And absolutely, if you're not making a profit from the care you're giving, then why are you giving it? Because you've got to keep the lights on, and you'd be better off taking the energy and resources you're putting into delivering that care into building up business from people who are willing to actually pay you a fair value for it. So it's understanding actually what you can and can't afford to give.
For sure. Really, really, really useful. I think that's it from all the questions. If anyone's got any more, just pop them in. And just a point here from Sheila, the UKHCA cost of care calculator is very useful. So we'll share that in the follow-up email as well, if you want to take a look at that. Now, just before we go, because we just do have a few minutes left, as David mentioned before, he works for Lifeline 24, and they want to work with care providers to ensure that everyone that would benefit from the safety of a pendant alarm gets one. So while we have you here, I'm just going to pass over to David and let him explain a little bit about what that entails.
Thank you. So from our perspective, we see our product as working very closely alongside domiciliary care. Anyone who needs a carer to be coming into the home probably should already be using a personal alarm pendant, giving them 24 hours a day kind of access to someone to give them help. It's a great way that we can let you know if the people who you care for need support, have any issues, or even have gone into hospital. And what we're looking to do is to work with care providers to actually, when they recognise that someone should potentially have one of these alarms, to put them in touch with us and make a referral so that we can talk to them, see if it's the right thing for them. And we're very happy to actually pay a referral payment to people who are willing to work with us on that. So if anyone's interested, please get in touch with me, and I'll be happy to talk about putting in place a partnership.
Great, thanks, David. Now I'll send that link out as well in our follow-up email, so you've got that in case you're interested. Now, I suppose all that's left to say is thank you everyone for joining us today. Thank you to our guests. I think they were really great, and I do hope you found it useful. So thanks a lot, David and James, for joining us and sharing your expertise. I really enjoyed it. I hope you all did too. And like I just said, I'll send a full write-up of the webinar plus a recording so you can watch it back at any point. I'll send any links that we spoke about during the session as well, so you've got those. And if you have any more questions, the details for Birdie are on screen there. There's also the link to Lifeline 24, so you can take a look at that if you're interested. And that is all from me. Thank you very much for sharing your lunchtime with us. Stay safe, stay well, stay inside. And well, I suppose we can go out to the park a bit more now, but enjoy your weekends. And I do hope you'll join me for our next webinar, which we will announce soon. So thanks very much, everyone. And thanks a lot, David, and thanks to James too for joining us.
No problem.
Cheers.
Thank you.
Bye.